more group that was catching my attention yet again is the Anil Ambani Group of companies. Just wanted to get all the viewers to get a fresh perspective on this one again. Last couple of months, we have focused time and again on these stocks. Why? Because at least from the last 6 or 9 odd months, there was a consistent move on some of the stocks of the Anil Ambani Group. Case in point, Reliance Power, case in point, Reliance Infra. These stocks have been consistently moving over the last 1 year, 6 months more so. And you know, in the last 1 month, there has been a reversal of the kind of move that we are seeing. And the key reason for that is that recently the Enforcement Directorate tightened their grip on Anil Ambani-led Reliance Group for the 17,000 crore rupee of loan fraud case, where Anil Ambani has been summoned, executives have been questioned, one arrest has already been made, and these have been the key reasons. Again today, most of these stocks are actually trending lower with a 5% cut, and this has been the case over the last few sessions for most of these stocks as well. So what is it that investors must be doing? Now, Arpit, we do know over the last 6 months, many investors have been looking at positive news flow around these companies of being debt free, of looking at more deals that are being signed, going big on the solar space, for instance, as probably something that was an indicative of a turnaround that could take place. And many retail investors have also tried to take the benefit of this upward rally and entered. And now they are feeling stuck because of many days of lower circuits that are coming in. What is it that is your advice to investors of these groups?
So actually, if we see overall from a holistic perspective, generally we advise to all our clients and to all our players also. Generally, such counters, particular such kind of companies are relatively high volatile. And if you've seen the up move and the down move, definitely are very swift. If we see historically from last 8 to 10 years graph of all these counters, so generally our sense is that whenever we go from an investment perspective, we generally allocate and we suggest our clients that if we are deploying 100 rupees, so definitely 80 to 85 rupees would be in a safe trending counters and the sectors that you understand and that are strong from a bigger trend perspective, rather than last 10 to 15%. If you want to really play on that high risky bets that you can play it out. But generally, if you look at the chart setup of all this counter, a very strong counter like you were seen from the lower levels. But as you rightly mentioned, from last couple of weeks, the stock is in downtrend. So I sense that any generally bounces generally it's very short-lived, and our suggestion would that if you want to build, definitely just deploy 4 to 5% of your total portfolio. And the first case, it's better to avoid such counters at the first place, because if you look at the monthly and the bigger time frame structure, if you get onto the wrong entry point, it's very difficult to take an exit. So our first point of caution would be better to avoid such counters. And even if you have stuck your positions in this thing, it's better to exit on some bounces, because definitely some bounce would be seen as some market gets recover. But I sense that better to refrain from this companies as a sector or as a theme wise, and better to stick to more quality companies going forward.
If you like the video, do like, comment, share and subscribe.